As AI mania takes a breather, a solid long-term entry point for Microsoft stock may be emerging. After a hot run from January to July, Microsoft shares have pulled back. AI mania may be waning amongst investors, but this is a favorable development if you've yet to buy this stock. It may take time for Microsoft to make its next big move, yet considering several factors, buying at or near current prices could prove to be a shrewd move in hindsight. Let's dive in. Here's why Microsoft's slump is a rare chance to buy Microsoft before the boom. Welcome to Timely Investment Research. Microsoft stock has been crushing it this year. After a big run higher on the heels of the tech giant's massive leap into artificial intelligence, the market is starting to take a breather with Microsoft stock. While this comes despite releasing a strong earnings report late last month, it makes some sense that investors decided to sell the news post-earnings. AI mania is simmering down. Concerns about the macro picture are rising again as well. So, with this sentiment shift, is it time to sell or avoid this stock ahead of further declines? Not so fast. While it is certainly possible that investors went a little overboard about this company and its high exposure to the rise of generative AI, this trend is real and it's not going away. Hence, consider Microsoft's recent weakness to be a favorable development. Here's why. Microsoft stock reversing course after earnings. Already trading sideways in the lead-up to its July 25th earnings report, in the 2 weeks since the release of its latest results and guidance, Microsoft has given back a portion of its 2023 gains. Again, it's not as if the company reported disappointing fiscal results. For the company's fiscal fourth quarter, ending June 30th, Microsoft's revenue came in at $56.2 billion, up 8% year over year. Earnings per share came in at $2.69, representing a 21% increase compared to the prior year's quarter. Besides demonstrating strong growth, even as the tech slowdown weighs on demand, these figures came in ahead of analyst expectations. Revenue beat sell-side forecasts by nearly $700 million. The aforementioned earnings per share figure beat the street's number by 14 cents. Unfortunately, unlike with the last earnings report, in late April, market conditions have outweighed these promising numbers. Hence, a post-earnings reversal for Microsoft stock rather than a post-earnings surge. Yet, while waning AI mania has created a frustrating experience for existing investors, now is not the time to realize gains. Nor is it the time for prospective Microsoft investors to stay away. A banner year ahead? Microsoft may move lower, but make no mistake. The company's generative AI catalyst is strengthening, not weakening. Yes, generative AI played just a small role in Microsoft's revenue and earnings beat last quarter. This may also explain why the market had such a cool reaction to results. Yet, while management has conceded that the financial impact of integrating generative AI technology into Microsoft's many platforms will lead to gradual growth, expect this factor into results beginning this quarter, which marks the start of the company's fiscal year ending June 2024. As I discussed when last talking about Microsoft stock, there are signs that success monetizing this technology could end up being greater than currently expected, such as the pricing Microsoft is able to command for its generative AI-enabled Microsoft 365 Copilot platform. That's not all. The segments of Microsoft's business experiencing a downturn right now, like its personal computing unit, could start to report stronger results as the tech slowdown eases and a sector recovery takes shape. In short, a banner year may lie ahead for the company, resulting in earnings per share that comes in ahead of even the top end of current forecasts. Sliding back into the buy zone. Per the sell side, Microsoft could earn as much as $11.76 per share in fiscal year 24. With the stock changing hands for around $330 per share today, that implies a forward valuation of around 28 times earnings. While a premium multiple, this valuation is more than sustainable. If results exceed this top-end forecast, bouncing back after the recent sell-off is well within reach. During the following fiscal year, earnings per share could be as high as $14.02. If it becomes all but certain Microsoft will stay in high-growth mode for years to come, Microsoft could time re-hit its past high and hit even loftier price levels, $400, $450, perhaps prices north of $500 per share. As the bull case gets stronger, while shares fall back, Microsoft stock could soon slide back into the buy zone. If this happens, consider adding to a position. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.